Hey everyone, welcome back to the Money Revelation Podcast. We are officially on season 3 now, episode 1. And episode 2 was fun. A lot of guests, a lot of good information. Go check it out on season 2 if you haven't. Also on my website under the new podcast tab or on YouTube, Spotify, Apple Podcasts, everywhere pretty much right now. So today we're kind of diving into something that I wanted to get into. Um, it's all about some financial gurus out there that put out some statements, put out some posts like that. And I kind of wanted to dissect them a little bit and rip into them a little bit. So we're going to get a little bit raunchy today. And this might not be for everyone, but you know what? We're going to go with it anyway. So I saw some posts recently, and I'm going to do a couple episodes on this, maybe not back to back, but I want to decipher some of these posts and kind of bring them back to reality terms. The first one is when you buy new cars for teenagers, you're setting them up for a life of ridiculous expectations. Think about their future. Okay. Brand new cars, I could see this, $35,000, $40,000 cars, 17, 18-year-olds don't need it. My first car, shout out to everybody that is thinking about their first car in high school, was a 1991 or 93 Dodge Intrepid. This was in was it 02, 03? I think I got it right around 02, 03. So it was an old car, but it lasted for a couple years, and that's what it needed to be. So I don't think that it's such a bad thing to have a used car, but let's take a look at inflation and used cars right now, guys, okay? And I have a lot of experience in this because we just purchased a new used car probably about 4 or 5 months ago. So have you guys even checked used car prices lately? If you're not looking for a car, you might not have. Let's just break it down a little bit because I know a lot of research. I've done a lot of research and we just got one. Let's use the theory that we're looking for a car in this theory that's maybe for a high score 8 to 10 years, right? Because when you get more than 8 to 10 years, guys, let's be honest, there's a lot of maintenance, right? We got to have it running. Something that doesn't have 170, 180, 200,000 miles on it, right? It's okay if you maintain your cars, that most cars will, in the last 10 years, especially will last you 200,000 miles. But why would you give your 17-year-old a car that's going to be breaking down or barely moving? So we just bought a new used car a few months back for around, I think it was $8,000. I searched and searched for me and my wife and searched and searched and searched and did research. Finally found one that worked. It needed some touching up and stuff like that, but we got it all fixed up. It was a great deal. Now it had 120,000 miles on it, but it'll be fine for the next 3 to 4 years. That's our goal. We like used cars. We want something that's going to work, going to last us a few years till we decide to make a different decision. But these guys, these are few and far in between right now. If you go below 8 to 10K right now, the car most likely will be in a documented accident, has some type of major repair that will need to be done. And most likely it isn't even going to barely get you through a year or two. I mean, what is the point of that? So no, don't go buy your kid a $30,000 car when they're 17, 18, but unless you got an extra reliable car around that you're not using or something like that, then I think helping them co-sign on a used reliable car is very appropriate, you guys. Now the part of co-signing it and then making them not have some type of part-time job in high school or end of high school, going into college, putting money into the gas insurance or something. Yeah, that's frowned upon. I agree, you got to go work for this. If I'm going to co-sign your car, you got to put something into it money-wise. But remember, most high school seniors, you guys right now, right out of high school right now, are probably working at your local grocery store, restaurant, convenience store, maybe, making just enough barely to get started. So yeah, I'm sorry, that that theory is outdated. It really is. And with inflation, the cost of living, setting unrealistic expectations for your high school kid, it can already be overwhelming to them. They got enough stress in their life right now. But I think my thought process was, and I summarized it right here in front of me, so I am going to read it if you don't mind. As a parent, we can still set boundaries, but help our kids out a bit until they get a better paying job and can successfully be a bit more on their own. You guys, I'm glad that my parents did this. They helped out as much as they could, but when I got a higher paying job or a raise at my job back then, They cut a lot of the handouts and said, hey, you need to start paying more and paying for this, paying for that, figuring out. Be supportive, but firm. They need you in this moment more than they've ever needed you coming out of high school. So that's my thought on that comment. It's not going to hurt you to co-sign with your kid for a couple years until they get rolling. All right. That was one of them. I want to do two. I'm not going to do my third one because I want to save that for later this week, some videos on tax. This one really grinds my gears, especially because I do taxes now the last couple years. A tax refund is not a bonus. It was yours all along. This is such a to the point, silly statement that doesn't analyze, again, everyone's individual situation. I personally love it with my wife when we get a nice chunk of money come back in March. We're going to be getting it back in a couple weeks. Let's analyze the statement, okay? It's not a bonus. It was yours all along. One, I made some points here, so I'm going to be looking up and down on video here a little bit, guys. Us getting back money each year, according to this statement, we are paying too much in federal taxes, you're saying. Here's the thing, you guys. If we don't pay the IRS the standard 10% or so, then come tax time, we might break even or we might owe money back to the IRS. But Brian, you'll have a little more back in your paycheck throughout the year and you can, invest and do it. Okay, fair enough. But you just told me if I do it that way, that I might owe the feds come tax time anyway. So either way, aren't we losing out, you guys? I mean, come on. The statement is assuming, too, that if most Americans did get a good amount of money back per paycheck because of less taxes being taken out, you guys, that they'd be doing with what you want them to do with it. What, probably investing, maybe putting more towards the savings and retirement, right? They're barely scraping by, you guys, right now. Oh my gosh. And while extra money would be nice, they often need guidance with how to even live and get through inflation and groceries and all this other stuff, not lock it up in a future account. Now, obviously, let's slow down here. Retirement and the future is important. I preach that all the time. But we also have to think about the present, you guys, okay? So 3, even if they did use extra money now, more present, let's talk, for debt paid down, paid off, building an emergency fund, and that can also happen in March, you guys, okay? Not everything has to be done throughout the year. Now, granted, it'd be nice to do all that. You should have some type of emergency savings. There's no argument about that. You should try and avoid debt, credit card debt. But the fact of the matter is this last year or two, most Americans have debt now. Let's come back up to times a little bit here, not what you want, what we need to do for the people that are already in this spot. Okay. So when we get ours back in March, and I'm going to tell you why it's so great to get things back and why we're getting back money, most importantly, we always project 3, 4, 5 different things we want to spend that money on. It's usually kids, maybe paying down something, putting some more to the emergency savings. This year it will be that because we spent most of our savings pretty much last year fixing houses and stuff like that, fixing our houses. So what I hate about this statement so much is we don't discuss each individual scenario with the statement. So I will. I'm a tax guy now, and I'm a finance guy. So let's use client A. And client A might have no kids. They might be making too much for what's called a property tax credit. And they don't qualify for a lot of the extra credits. Straight up. Maybe they're single, right? Therefore, if they don't take enough taxes out, you guys, then come tax time, they're definitely going to owe. And they might owe significant amounts. Okay? Say it again. They might owe significant amounts if they listen to this. They're single, no kids, basically no credits, just W-2s, and not enough taxes being taken out. Okay? Client B, who's going to be similar to me and my wife, let's say they have 2 kids. We do. Property tax credit and more. They might benefit from getting a good amount of money back on that. Hence, someone like us. Like I said, we get the standard taxes taken out of my wife's W-2 job. It's just a touch under 10%, I think. And to be honest, with my income from my business, I just write things off because it's a business expense, right? Yeah, so we have to write it down to balance it off. But we still are getting a pretty huge refund this year, you guys, doing the correct things because we have daycare as well, child tax credits, all these credits that people aren't talking to you about on the internet. Okay. In summary, here's what I hate, guys. I really hate to see when I prepare a taxes for clients and then they don't realize that claiming in W-4s have changed, which I'm going to make another video on. So keep an eye on my Instagram this week and some other social media about W-4s. Years ago has changed. We've helped like over 100 people fix this. But anyways, they might listen to the above and quote and say, okay, you know what, that's fine. And then they owe. Sometimes they owe more. Like, guys, get with a trusted financial and tax expert that is going to give you every detail. Okay. Not everything you read and hear on the internet is true. My goal is not to just get you your taxes straightened out, but to then have you not have anxiety around your finances afterwards and know what to do about it. If you do owe, I can help you. We have great connections through our tax company, basically, that can help you with all that stuff. My point is, the internet is getting to the point where it's just real quick. Nope, you don't do this, it doesn't work. Don't do that. Don't do that. They don't break it down, guys. They don't break down the individual. Okay? I just broke it down for you. You know, I appreciate this. That was my episode for the day. But I just wanted to do this. I'm going to do another one later this season. Maybe not this next week, but maybe this episode after. But anyways, make sure you're following the Money Revelation podcast on Spotify, Apple, and now it's posted on YouTube. So if you want to watch it on video, you know, I'm going to be posting a lot more video episodes like this. Yeah, and get with a trusted professional. I'll drop the stuff in my YouTube comments, my connections, or my contact, I should say. Reach out to me, you guys, if you need to ever talk about any of this stuff. I'm here to tell you the truth and get you what information you personally need individually. I'm not here to fluff around. So I appreciate you subscribing to this. I'm glad. I hope this was helpful, really helpful for some people. That was my goal in these episodes coming up is I want to be more real. I want to be more blunt, I guess you can say. And I want you guys to understand that there are people out there that are willing to help you. Until next time, stay blessed and positive. Have a great day, guys.